Today's market call is brought to you by MoneyLion, the first digital ecosystem for consumer finance, empowering everyone to make their best financial decisions. Today, the 5th of May, 11 a.m. on the East Coast. Guy Adami, Dan, Nathan. Now, there's a saying that Dan doesn't like. Apparently, it's been a minute. So if you hadn't seen somebody for a while, let's say it's like a long-lost buddy from college, and you run into him or her and you say, oh, it's been a minute, that implies like it's been quite some time. And Dan gets exorcised by that. So I was thinking about spending the first 60 seconds of the show in abject silence, just staring straight ahead, but I didn't want to freak anybody out.
Yeah, let's not do that. That would actually compound my dislike for that expression. It's been a minute. Guy, it's been a minute since the market sold off. I'll just tell you that, since the stock, because we had
That's a nice job by you.
Consecutive up days in the S&P. Now, by the way, I think you and I would both agree we don't want the market to collapse, right? We don't want the economy to collapse. But when you think about what we learned on April 2nd, is that the administration did not seem to be too bothered about the notion by investors or by consumers or by companies that the market might collapse, and they don't really care, and that the economy might take a breather, and that, not that they don't care, but this whole readjustment. So how do you explain 2 weeks later, it seems like all of that is out the window, because they did care about the stock market. They do care about the economy. They do care about consumer, strength, or therefore like confidence, and they care about business confidence.
No, of course they do. And I don't think anybody wants the market to collapse. I think if you're reading between the lines, what they were saying was they were willing to tolerate a time of uncertainty, some, again, weakness in the stock market to get to the end goal. I think, again, what scared them was that move a couple weeks ago in the bond market. So, and I've said this and I believe it, I think the stock market for them is a nuisance. I think the bond market is what really scared them, and rightly so, by the way. But let's take a look at, said S&P, because as much as it traded down to, and we'll show you that trend line that we have been drawing prior to and up to that, that 2020 low, that uptrend line that we kissed basically on April 2nd on the downside, that's intact. Now, we said collectively when it held that trend line that we thought you'd see a 50% retracement. For me, it was about 55.50 or so. We've obviously overshot. Now, we traded up and through the 50-day, and here we are trading basically on Friday up to about the 200-day moving average. I guess this all makes a little bit sense. So now the question you have to ask yourself, was the move on Friday and the move into Friday enough? Was that move up until the 200-day moving average enough? Does that death cross still hold any water? Or you throw everything out and say, you know what, we're going to go blowing through the 200-day moving average, and all this will be just a, basically a glimmer or just sort of a footnote in history. We'll see.
Yeah, I guess the thing, and I said this a couple of weeks ago or a week and a half ago, maybe, when the market, a lot of folks, we hit max bearishness. The sentiment was horrible, whether it was retail investors, whether it was institutional investors, whether it was the psychology coming out of the C-level suite and the like. I was like, yeah, we could bounce easily. I mean, the way in which we sold off precipitously, it didn't, it was pretty similar to late July into early August. And we know we got a V reversal there. I think the conditions in which, that volatility was created, very, very different than this time around. But I said, I can't really envision a scenario where the S&P gets back towards 6,000, like in this year. I really couldn't. Now you could say to yourself, we got to, 5,700, the 200-day moving average is 5,750. Let's just call it flattening there. What would be now, as sentiment has shifted, what would be the conditions? Well, let's just say, a meeting between Xi and Trump is scheduled. Let's say it's 2 weeks from now, right? And you could make the assumption that if they're going to meet, then there's going to be some sort of tamping down of the worst sort of rhetoric, right? And then that could be the thing that maybe puts the lows for the year in. Could we see that? Sure. 4850. It seems like a long ways off. We're almost, 1,000 S&P points. So it's a massive rally. And then you could say, okay, so then maybe we ratchet down that 145% tariff on China. We've already kind of, taken a lot of industries and such out of that sort of thing. And let's just say we're left with the the tariffs that we came in with this year, this administration, plus that 10%, which is not insignificant. You know what I mean? Or was it 20% that they did? They did 10% blanket around the world, maybe an added 20, and then they started ratcheting up. Is that the scenario where we're testing 6,000 again? I don't know, but it could be.
Could be. So, Amanda, while we're talking, and by the way, Amanda's doing great. If she could throw up that uptrend line from 2020. So this is a static chart, but we'll put up a real-time chart. We'll show you that uptrend that, we've drawn for a while. I mean, you can see it as clear as day. I mean, you can even fudge it a little bit to the downside, and you can see that we basically stopped spot on. There you go. Exactly where we should have. I mean, that's close enough for government work, as they say. And then the subsequent rally, as you said, makes sense. Now, everything you just sort of put out there. So if there were an announcement that in the middle of June, let's say, there's some summit between the president and President Xi, yes, the market would probably rally into that. And I think basically what's going on here, people say, you know what, I don't want to be caught holding the bag if, in fact, these guys start to chat, because whether or not they nail something down, you're going to see a rally. And I totally get that. But you come back to this notion that with or without tariffs, and I believe this, there has been a significant slowdown. There are other things that should be concerning. There's no real, still, in my opinion, there's no market, there's no valuation cushion on the downside, at least not in the foreseeable downside. And, there's still that slowdown that with or without tariffs had been in place long before people started talking about this in earnest.
Yeah, one thing that struck me, and take a look at the Risk Reversal podcast that just dropped in your favorite podcast store. It's also on YouTube. And you and I were talking about this a little bit, but this is kind of a different, bent on what we heard from Trump on Meet the Press on Sunday morning. He was talking about, this was an exact quote, because he was talking about the auto business. He's like, the car business is going to make a fortune with tariffs. Okay. And I thought that was interesting, because you and I know this, that if dealers have to pay, increased tariff, right, on cars that are coming from outside the US, then all of a sudden, or parts and the like here, that the dealers either have to make a decision to eat a bunch of those additional costs, right, or pass them through to consumers. So I just think about any tariffs that are left on the table for industries like autos that have multiple tariffs on the parts and this and that, or whatever, you know what I mean, is not going to be a fortune anytime soon. And you could say, hopefully, we get some manufacturing. I think everybody agrees that the idea of reshoring manufacturing in a way that makes sense for the American worker, that makes sense for, corporate America, we're all for. But the problem is, and they speak to this, the administration, that adjustment period is not months or quarters. It's many, many quarters put together in years. And in the meantime, it could be very destructive to demand, but it could also be destructive to corporate earnings, which would be the thing that if you're looking at an S&P, per our main man, John Butters from FactSet, at 21 times, it's not pricing in, some sort of adjustment period.
Well, that's it. I mean, the market is still expensive, and whether or not the autos manufacturers, auto dealers, auto companies make a fortune, I mean, I will tell you, and we talked about this years ago, in the best environment that they ever found themselves in, which was pre-COVID, when people were selling cars hand over fist at record numbers, auto stocks couldn't get out of their way. I mean, General Motors at $46 is basically the same price it was a decade ago. I mean, I won't even get into Ford, but if you want to just play the game, at current prices, it's the same price, I think, than when I was in high school or graduating from college. So whether or not they're making a fortune enough, what we're tasked to do in terms of trying to figure out these stocks, I mean, they haven't done a whole hell of a lot. And that's just a 5-year chart. I mean, we can go back longer than that, and you can see what I'm talking about. It's effectively gone nowhere. Yeah. What I do think is interesting, though, is what does all this mean? And, I started by saying the bond market scared them, and justifiably so. Well, here we are. You can pull up if you want to pull up a yield chart or TLT chart, whatever it is. TLT, I think, is trading about 87 and change. And, you say it's not a big deal. There's been no real meaningful now, it has bounced a little bit, but you look where we are in terms of where we were in the fall of 2023, which was in yields made, the 10-year yields made this recent high. I mean, yeah, it's bounced, but not in a meaningful way. And I got to tell you something. I'm still of the belief, and I'm probably, with each passing day, I'm fewer and fewer people in my camp, that yields are going higher for the wrong reasons, Dan.
Yeah, I mean, and that's been the thing. That's been the bugaboo. And again, you could say, okay, well, here we are, 4.35, and that's where we were a year ago. And we've talked about this a lot, but it really is the thing that the administration was targeting. It's the reason why the administration is putting pressure. At least Trump is putting pressure on Fed Chair Powell. We know that that's Wednesday. It'll be interesting to see what happens there. But if he has, it maintains this kind of pause, and it remains kind of hawkish as they're thinking about their dual mandate. Higher rates takes care of one thing. It basically is hoping to put a lid on inflation, but the longer rates are higher, the more difficult it is for first our country to roll debt, but there's also a lot of corporate debt that needs to be rolled, which really puts the Fed in a box, right? And then here's another thing that I took away from that conversation. I can't remember if it was Welker, the interviewer, brought it up, or Trump brought it up about smaller businesses. They were talking about, the trade war and the impact there. And I think the failure of a pushback on that, because Trump is like, well, small businesses are going to do great. The problem with small businesses having to readjust in the near term to this new, tariff world order or trade is that they are 2/3 of the hiring here. They are the first that are vulnerable by inflation, by trade wars, by higher rates, that sort of thing, right? And the dollar doesn't help them a whole heck of a lot, the weakness of it. So if you're worried about that Friday jobs report, you say, okay, well, that's backward looking. Now we have to start modeling in what a longer term protracted trade war looks like, a weaker economy, right? Then you start saying to yourself, what comes first? Jobs. Right?
Yep.
Jobs come first, and it's going to be small businesses that cut. And small businesses, when they're cutting jobs, it doesn't mean that they're going to see some relief automatically. It means that their business is weak, and therefore they're trying to match costs with lower demand, right? And so those are the sorts of things I think are really important to pay attention, right?
Look, small business, as you'd mentioned the numbers, I mean, that is the lion's share of the businesses in this country. And obviously, they're the biggest employer of people in this country. And if things slow down with or without tariffs, I mean, tariffs just sort of accelerates it, in my opinion. Yeah, it's gonna actually absolutely be a headwind here. And you correctly mentioned that the jobs report on Friday is backward looking, and it came in better than expected. The unemployment rate stayed the same. There was a revision lower for the prior month. If you look and read the tea leaves, I think, to me, and this is just me, I think it's almost a foregone conclusion that unemployment rate is going to surprise people to the upside. And once it starts to move, it's sort of this escape velocity. That's a term that I've used and Elizabeth Young Thomas has used as well. And now you want to look at the IWM, which, by the way, has bounced off that early April low of about 175 or so, back to about 200. But it's not like that's been all that awe-inspiring as well. And you still have massive double tops in the IWM, which, as we pointed out a number of times, is not the best constructed ETF. Real quick, we have a couple questions. This is from Chris L., and this sort of speaks to what we're talking about. Are we back to a VIX crush environment? It's a great question. I don't think so. I mean, as we're sitting here, the VIX is about 23 and change-ish, which is still, if you go back and look over the last couple of years, it's still at the higher end of the norm. It's at the lower end of the recent norm, but it's at the higher end of the last year and a half, 2-year norm. So I don't know. I think there are a lot of people out there that think if the meeting that you talked about comes to fruition, all these things, we could easily see a VIX back to the high teens. I mean, yeah, you could. I'm sort of in the other camp that I think VIX is going to remain elevated. So we'll see, Chris. I don't have a real answer for you, Dan.
Yeah, before we get to Toby's question, I just want to go to the NDX really quickly. So the NASDAQ 100. And this is interesting because we just looked at this the SPX, and it didn't get to that 200-day. Guy, Friday's high.
Mm-hmm.
Look where it kissed. I mean,
Right
literally rejected at the 200-day. You can go back to, a month ago, we had the same thing, that flattening 200-day moving average. So you were calling for, a 50% retracement off of those lows. It overshot it a little bit. I mean, if you were looking to trade this right here, putting a stop just above that 200-day moving average, if you're looking to trade it to the downside, makes a lot of sense. But let's go to
we'll leave that up real quick, because draw a trend. I mean, go back to that. Yes, scroll a little bit out, Amanda. So you can draw a trend line from the April 7th low. You can connect it with the 21st low. And then the third point is going to be where we trade down to, in my opinion, whatever that is off of time decay. So you can do it right there, 19,000. So you can start to do that math. That's really short term, but there's your short term uptrend against, again, the NDX that moved up to and seemingly failed at the 200-day moving average.
Yeah, I'm going to do this on the fly. CC had priced up something in the SPY, but I actually want to focus on and leave this up for a second. So, all right, let's pull up a QQQ chart with a 200-day moving average. Okay, so to me, because of the concentration in the Q, I just think this is a really great vehicle. You know what I mean, to trade. So let's look at that 200-day moving average is what, 491. Okay, so this is how I would think about. Let me go to June expiration. Okay, so that's June 20th, the third Friday in June. Okay, and let's just say I'm looking at that. So here we are right now, and it's trading at, let's say, 486.5 and 491. That's about 1.25% above here, right? Am I doing the math correctly, guys? So about maybe 1% or so.
Mm-hmm.
So if I'm looking at June expiration, I might look to the 480 put. All right. The stock or the ETF 486.5 right now. The 480 put in June expiration is offered at, let's call it 1260 or something like that. And let's go all the way down. You see that kind of 450 level there. Okay. Like, to me, there's that gap, guy. You see that? Yeah, right there. So the 480, and let's just go look at what the 450 put is. If I was looking at a put spread, right? So the 450 put, I could sell at 560. So if I'm playing 760, right, for the 480 put, and I'm selling the 450 at 560, that would cost me $7. At 480, okay, if my break even is down at 473, I could pay $7 to possibly make $23. Now, I don't love that risk reward. I'd almost go
3 to
down
1-ish.
a little. Yeah, but you could look at 440 or something like that. That's how I would look to do that. Why am I doing that? Let's just say I spent $7. Well, you do the math to the upside, right? That's where you're stopped, right above that 200-day moving average, and then you have potential gains of 23 to the downside. I would probably make it 480, which let's call it 1260, down to 440, which is 430. So I'd basically pay another dollar or so, $8, eight and change, to have another $10 wide. So the 480, 440, and it's a little less than a quarter of the value. That's how I would be thinking.
And I think that's perfectly reasonable given the run we've had, given where we traded up to, and seemingly stopped. And it makes a lot of sense. And you're making a bet that, okay, the run is over in the short term. We're through earnings to a certain extent. We've heard from a lot of different companies. The market may have exhausted itself. You still have an elevated VIX. I don't think the market's to me, it's not going to go blowing through here in a meaningful way unless you get the aforementioned headlines that you talked about. But I think the risk reward sets up really well. By the way, I want to get to Toby's question, but I want to get to Eric Metcalf's question, because I didn't hear Warren Buffett say this. I believe you, Eric. Do you put any weight on Buffett saying the opportunity to deploy cash will likely come in the next 5 years? If he said that, that's great. Whether or not the duration, that to me is sort of it's important, but what's more important is they continue to add cash. Now, the flip side of that coin is people will say, Guy, the only reason they're putting cash on the balance sheet is because he's stepping down and he wants to give a clean slate to the next guy coming in. Okay, I can buy that to a point, but I also think that Warren Buffett's somebody that plays by the rules regardless as to whether or not he's stepping down. So I think he's going to do what he's done historically, regardless of whether or not he's stepping down. That's just my opinion. That Buffett indicator, which we've talked about, which is off its peak but still extraordinarily high, is still in place. So if he said 5 years, that's a pretty interesting comment, Dan.
Yeah, and we know over the last 30 plus years, I mean, he's used market dislocations to deploy cash, right? And if you think about what happened in 2022, we've talked about it in the stock market. It was a very orderly sort of sell-off. I think at the S&P at its lows was down maybe 27%. The NASDAQ was down maybe 37% or something. We didn't close down that much on either of those indices, but he didn't have the sort of dislocation that one would expect where he's going in and making like last resort bids for stuff. Maybe in Q1 of 2023 in the regional banking sort of crisis that looked like a blip in hindsight, he didn't get the opportunity because nothing really fell apart so badly other than SVB going to, zero are being sold for parts. So again, I think it'll be interesting to see how cash is deployed there. I suspect it's going to be in more state industries. If you look at how they missed, and I know this sounds stupid as hell, but how they missed this last 10 years of tech explosion, whether it was a whole host of things, in the early 2000s, here we are in the mid or 2020s, right? They just really haven't participated much in tech in general. Apple was their play. I know that they were in IBM for a while and they got out of here, but this goes back to something that we've talked about a lot. How do you gauge the time horizon of deploying cash? Right? It's nearly impossible to do. Buffett has gotten rich slowly. This is something that we talk about with consumers all the time. You and I get the questions all the time. When do I deploy cash? So we've talked on the show about dollar cost averaging, but I'd also say, and you made this point on many occasions, when you see a VIX go above 30, which is not a normal occurrence, and then you see it go above 40 and stay there for a few days, if you are not in the position to dollar cost average, but you have cash and you're looking to be Buffett-like and you're looking to deploy capital, those are not bad times. Because if you know who you are in the market and Buffett is telling you, I can take years to deploy this cash, then you can do that same thing. We just talked about the QQQ. Let's just say that trade idea that we just put up on the fly gets back down 10% from current levels, and it does it in a quick fashion, and you see a VIX back above 30 on its way to 40, then that's probably not a bad time, even if you have hedges on, to start deploying capital. If you have 1, 2, 3 year time horizon on that sort of thing, the market will be higher, because the idea that we have protracted bear markets, as you use the term alchemy, the Fed has gotten rid of those. We've had, even in 2020, when the market crashed on COVID, we were basically higher within a year, right? When we had the same sort of situation, go on in the financial crisis, one down year, 2008, that was it. So the opportunity to kind of buy some of those V reversals is there. Are you taking risk down there? Do you want to take that risk at the time where it feels really scary? That's hard to do, but if you're thinking about who you are in the market and your time horizon is appropriate, you're going to have those opportunities every few years.
Yeah, I mean, I agree. And one of the other things we've said consistently over the years is if you give people levels of where they could potentially buy things and say, would you sign up for it? Everybody says yes on the downside. But what we've also mentioned is when it does get there, it's typically for reasons that you never envisioned, and it looks a lot scarier than you thought it could ever look. So you become paralyzed, which is why we say you have to have a plan going into these things. By the way, I think the trade, Toby, that Dan outlined sort of speaks to the question, if you want to throw Toby's question up real quick, because I think you address it. With that said, we have some earnings this week as well. And today it comes in the form of Palantir. And I'm leading with Palantir because, Ford and HIMS, I guess that's interesting. Ford, to me, hasn't really been all that interesting for quite some time. But Palantir certainly is, Dan. And once again, it's gotten itself really expensive really quickly.
Yeah, so it's interesting to look at that move in early April when the market reversed there. You see that. Maybe Amanda can isolate that 13% implied move in either direction. So you can do the math on that. I mean, it's basically, we're talking about a 15, 16% or $16 move in either direction. In the last 2 quarters, we've had 22% plus up moves. You see that gap going back to late January, early February. That was the last one. And then you see that gap. It almost looks like a little blip, but it was a below 40 gap to above 50. This thing is so far, it's nearly 100% guy from its 200 moving average. That is not something that makes a whole heck of a lot of sense in markets. It's not something that makes a whole heck of a lot of sense in a $300 billion market cap company. It's not something that makes a lot of sense for a company that's trading at 77 times trailing and current sales, 61 times next year. This is almost an impossible stock to grow into its valuation. The other thing I'd say, it trades like a company that's going to get bought out. Nobody can buy a $300 billion market cap company, and certainly not at that valuation that's mildly positive on a gap basis, and sales are below $4 billion this year, maybe $5 billion next. So I look at this and I say to myself, okay, I want to go the opposite way on this, but how do you do that? You know what I mean? Like, do you do it through options? Vol's really pumped. It's a really difficult way to play it. So sometimes, and all right, so you give me your 411 if you're long. I think I know what you're going to say, but I think it's really important to hear.
Well, I mean, look, you look at this chart, you don't know what it is, but you know what the metrics are that you just talked about. You look at that prior top, you looked at the subsequent sell-off, and then you look at this bounce, you say, my God, this is almost going to be a textbook double top. Valuation, you don't have any cushion whatsoever. How are they going to say anything that's going to continue this move to the upside? That's the way I look at it. Now, with that said, they could say just about anything, and the market is on a hair trigger to want to buy this thing. But the valuations, to your point, do not make a lot of sense. What you can wind up seeing is stock that closes around here, the report after the bell, gaps open or gaps higher on the back of earnings. Then you have some sort of gap open higher tomorrow on huge volume that exhausts itself, and maybe you set up for one of these island reversal type of things. I mean, that's an absolute possibility. I think you can wait and see if that happens. But if you're long this stock, and chances are if you're long this stock, you're long it from lower prices, regardless of what happened into February. I mean, you got to do something here, Dan. You either got to sell upside calls to at least create some sort of synthetic dividend, understanding that doesn't protect you to the downside, sell a quarter, a third, a half of your position, do something, but don't just leave this to chance. And again, my opinion.
Yeah, so this Friday expiration, 124, it's trading at 124 right now. Puts that expire again on Friday's close, and we are not big proponents of short-dated options like this. They end up being very binary into an event like this. But just to give you some context, that is offered the 124 put expiring May 9th at about $8.80 or so. Let's call it $9. So if the stock is at 124 and you're paying $9 for a weekly option, you need a move back to 115 by Friday's close just to break even.
Mm-hmm.
And that's not an easy kind of task here. It's not something, and again, the binary nature of it, you pay that right now tonight. Let's just say the stock's flat, right? The law of large numbers is making it harder and harder for this thing to gap up 13 and close up 20 or vice versa. Maybe it's flat. I don't know. And then that $9 in premium goes poof. That's a really hard way to trade.
I agree with you. But again, to the point, a lot of people talk about Palantir. We get a lot of questions about it, which leads me to believe a lot of people are in the name. I think just sitting back and leaving it to chance, given this recent run, I think it's a mistake. But that's me. And if it gap opens higher tomorrow, I will say the same thing, because you can't play Monday morning quarterback. What you can play, though, is this next slide that Amanda created, the untouchables in terms of tariffs, and comes down to Uber, Spotify, and Netflix, which are all up pretty much the same. Netflix 27%, but you see what I'm doing here. And I guess to a certain extent, that's all true. I mean, they sort of find themselves sort of basically inoculated from all the external stuff going on. Uber, I'm a little concerned about, because again, at the end of the day, it comes down to the health of the consumer. But I also think they're operating better. And for you fast money fans out there, know Uber is the U in my tube. So let's throw up an Uber chart, because as we said, another name that reports, I just said it with Palantir. So I got to say it with Uber here. If you've been long the stock, given where we just ran up to that prior all-time high in October, you got to do something. Absolutely have to do something. You have to take some money off the table. But I will say this as well. Longer term, I'm still pretty bullish in Uber here, Dan.
Yeah, man. Like, what a move. I want to go back to that October gap. You see it to a new all-time high. Excuse me. Hey, Amanda, will you pull up like a 2-3 year chart of Uber? Because that gap, you can't really put it in context, the one in October, until you kind of back it out a little bit. Now, the stock has obviously been very volatile. Look at that. It gapped up and above that prior high. And then what happened is it kept on going lower. So it was October. It was Tesla's robo-taxi event. People were really excited about the Tesla side of it. But then when they realized that there was no there, or it was going to take a bit, for this thing to kind of evolve, Uber just gapped up. Now, it kept on coming in after that, because again, I think people came around to the fact that this could be a big business for Tesla. I don't know. It was so crazy. So now what's going on is like is this company immune to a slowdown in U.S. economy? Is it immune to, the sort of, problems that you have with a trade war? I don't know. I mean, but I would think a U.S. economy, this is something that is a bit discretionary, right? If people are going to walk or get on their bikes or take public transportation. The last thing I'll just say is that, maybe, I don't know, is oil a tailwind here? I would say no. If people were taking these sorts of things instead of driving their cars, that sort of thing, I don't know. It's a curious one to me here, Guy.
And yeah. And again, given the run, you have to do something. But given the fact that, now it's the third time up to similar levels, as Carter would say, the more times you test something, the more chances of it sort of breaking through, whether the upside or the downside. The other name that we have to mention, because it's going to look very similar, throw a Spotify chart up. We just had it in the impervious to tariffs. Again, a name that's traded up to this prior high. And that you can see it on a longer term chart. If you sort of make this shorter duration, it's even clearer that we traded up to this prior high. You tell me, Dan, and you talked about, standard deviations away from the 200-day moving average. It's happening again here in Spotify. So as quickly as these stocks got back to normalcy, that's as quickly as they got back to, again, sort of absurdity in terms of the performance that we've seen.
Yeah. Here's one that is just so odd to me, and I'm just going to put this in there because Netflix and Spotify, like international are big growth areas for them, right? And that's a great looking chart right there. The stock sold off, by the way. If you look at that move just a few days ago, a week ago, because of earnings, there were a few things in there that investors didn't like. Look how quickly it's got up. It's back up there. This is one of a few tech stocks that I can see that this far away from their 200-day moving average. Obviously, Palantir was just one of them. We talked about Netflix as another. So I love the way that Amanda kind of phrased this sort of thing. Uber too. Trump announced tariffs, 100% tariffs on movies, foreign movies, which is kind of goofy. I'm sure Netflix has a whole host of great foreign movies. I doubt that there's something that are like high on the algos, pushing them to Guy Adami and the like here. Maybe some of those spaghetti westerns, Guy. Maybe that's something.
They don't make them anymore, though. I mean, those old, what is it, Sergio Leone? Who was that guy?
It was for a few dollars more.
Sure, fistful of dollars for a few good, bad, the ugly. Right.
They're amazing.
Yeah.
So I find that interesting because there were threats on, Europeans saying we are going to tariff, your streaming services, which are something that have had exclusions in the past. So again, there's a lot of stuff that are just kind of finding their way into this trade war. And I'm not sure that most of them are that impactful on some of these fringe sorts of things one way or another, Guy.
No, I agree with that. Again, sometimes you just got to sort of smile because, it does become sort of amusing at a certain point. But, what's not amusing is trying to navigate this market, which, again, I don't want to say it's made sense because that would be somewhat glib, but to a certain extent it has. I mean, this little overshoot to me is a little bit odd, but you still have, before we get out of here, I mean, if you believe in technical indicators historically, especially these golden cross when things happen to the upside, or conversely, these death crosses where the 50-day crosses through the 200-day to the downside, and both are sloping lower, which we're not only seeing in the different indices, but we're seeing in individual stocks as well. Given all the things we talked about, given the fact that valuation is still extended, I mean, it's really, really hard to be uber bullish, I think, in this environment.
One last one here. I just want to hit on a single stock basis. So this is Tesla. Tesla had this big rally. When we talked about this, expectations were so low into their earnings. We had seen deliveries. They were really bad. We had seen all the headlines about, sales plunging in China and Europe and even places like California. The stock's down today because, again, Reuters are reporting, we'll put in the show notes, that, Europe's still a disaster. China is really weak. And I look at this just from a technical standpoint, Guy. It had that big rally. There was also news that, most importantly, I guess, that Elon was going to be spending much less time with Doge. So you see that move. It is interesting where it stopped. It stopped at that prior high from about a month and a half ago. It stopped at that 200-day moving average. And I guess the point is like, I don't know what else news in the near term that comes out that's going to be particularly positive. Pricing is not going to change anytime soon. Uncertainty around trade, weak demand from some of these areas. And then the last thing, crude. Can we just pull up crude for a second? it's getting destroyed. The lower crude goes, the less interesting it is for a consumer to buy an EV. Do you buy that?
Yeah, I do agree with. I mean, no question about it. Historically, that's been the case, and you can see it in terms of gas prices. When gas prices are elevated, there's more and more talk around EVs. When gas prices come down, and they have come down, not to the extent that a lot of people are saying, but they've come down, there's less enthusiasm without question. And there's a chance here, before we get out of here, if you want to throw that Tesla. Look, when it was down around 225, we had said, I know what we said on the show. We said, you're pushing against something on the downside that's probably not there. We got down to levels that we saw in the fall, probably bounces from here, bounce to the 200-day moving average. I mean, there's a chance over the next couple months that there's a vol crush in Tesla where it just sort of does nothing and maybe filters in somewhere in between around 250, 255. I mean, that's not out of the realm of possibility, where it just becomes sort of a stock that no longer is as volatile or as interesting as it had been the last couple of years.
So you're saying there's a chance, Guy?
There's always a chance.
You know what that's from? That's from Dumb and Dumber. I don't
know if I've seen that, but okay.
Really?
So
no. No, it's Jeff Daniels and what's his name?
Jim Carrey.
By the way, some of the kids today, they probably haven't seen that movie. I mean, Jim Carrey in the 90s was an absolute force. He was easily one of the funniest guys out there. And then that movie was that movie with Ed Harris when he was like trapped in that little bubble. That is a great movie. And that was his basically his dramatic turn in a way. I love to see amazing comedians that go and they just turn into like these dramatic superstars. And what's
Truman Show? That's from Jacob, by the way.
What is the number one in our lifetimes actors who's probably one of the funniest guys who existed on the planet, okay, doing stand-up anytime he was on like a Carson or a Letterman or any of those things? He absolutely killed. And then he made a turn into dramatic movies, one of the best movies the last 30 years. He probably won an Academy Award for it. Do you have a guess on who this is?
Eddie Murphy. I know it's not right, but I love Eddie Murphy.
Dude, the Bill's just laughing at you right now. A guy who was in a movie, I'm trying to think, one of the great stand-up, okay? Good Will Hunting. Who's that guy?
Robin Williams.
Robin Williams did so many amazing dramatic movies after being one of the funniest guys.
Well, he did the movie with Jeff Bridges. I can't think of the name.
I love that movie, The Fisher King.
The Fisher, great movie. That was dramatic.
Movie. Yeah, it was.
No comedy there. He did a movie where he was like he developed film, I believe. He was like a really weirdo there. Well, that was nothing funny about that.
Oh yeah, that was with Pacino. Was that right?
I don't know. Maybe.
I think it was called like something 3 hours something. All right, here's another one. Okay, what was the one where he was the professor or the teacher at a
Dead Poets Society?
Dead Poets Society and Good Will Hunting. The guy cemented himself as one of the best dramatic actors of our lifetime.
He was also in a very touching movie where he plays a doctor.
Oh, yeah.
And his girlfriend is subsequently killed by one of the patients.
Really? Spoiler alert, guy. I mean, geez. Like, what's up with that?
Probably 20. Jacob will tell me what that one is as well.
He plays a doctor. 3 hour photo was the one we're talking about.
Yeah. Jacob, hook me up here, Jacob. I mean, don't leave me hanging. I'm looking at my phone because Jacob typically is Johnny on the spot. He plays at somebody. Oh, the guy who's the great actor that was in the Mission Impossible, blonde-haired guy that looks like Jim Gaffigan that passed away.
Jeremy. Oh no. Passed. Oh, dude, he was amazing. He was in Boogie Nights.
A lot of great things.
Almost Famous. Amazing role.
Can't think of his name.
By the
anyway,
way,
he was in this movie as well.
I'm usually Johnny on the spot with these names. I was at a concert.
Patch Adams. Thank you, Jacob. I mean, holy shit.
Yeah.
And what was the name of the actor?
Philip Seymour Hoffman.
Philip Seymour Hoffman.
Right. So I just want to be really clear, and the man is going to kill us before we get out of here. So movies like Mrs. Doubtfire, I mean, not exactly your sort of jam. He was really funny, but he was starting to do dramatic movies right out of the gate. The World According to Garp.
Sure.
That was like in the early 80s. I mean,
Good Morning Vietnam was not a comedy. It was,
he was very funny.
He was funny in it, but
wait, who had this line? One of the best lines, and I still quote it to this day. deep in my heart, I know I'm funny. Do you remember the guy that he like his boss in his
Marlon Brando in
no, no, no,
Godfather 2.
no, no, no. It was in Good Morning Vietnam. And remember they put him on the
Forrest
bench.
Whitaker.
No, it wasn't Forrest Whitaker, who was very good, by the way. It was I'll think of it. Who was the guy who was with who was in City Slickers with Billy Crystal? You know, the other
Jack
guy.
Palance.
No, not who was amazing. Who was
the short guy that was in the short guy that was in the Johnny Depp movie with Al Pacino.
Are we aging ourselves right here?
No, what was that movie when he was
in Bruno Kirby.
Bruno Kirby. He was in what was that Johnny Depp movie where he's undercover?
Oh, Donnie Brasco?
Donnie Brasco. Bruno Kirby was in that. He got whacked, if you recall.
Most guys in mob movies get whacked eventually.
It happens. That's why you don't want to be in the mob.
Yeah. That's one of the
reasons. But I don't know when you say that. I mean,
that's one of the reasons why you don't want to be. But when Bruno Kirby looks at Robin Williams' character and he says, "Deep in my heart, I know I'm funny," like that's just one of the best lines.
He's a little turd, Bruno. I mean, I'm sure he's doing something. He's a little fella.
Well, he's an older gentleman now.
Yeah.
You know what
I mean? That's it. I gotta prepare. Well, not really prepare.
You got an Audi 5000.
I got a 5000 because I'm about to speak with Mike Novogratz of Galaxy Digital. That's interesting.
He's the man. All right, guy. Let's get out of here. Appreciate everybody. We'll see you tomorrow.